Hello Kanna, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. In this video we are going to discuss the amendments in the tax rates chapter for CA Intermediate May 24 and November 24 examinations. We are going to discuss old tax regime as well as new tax regime in this video, and it is the most important video because 110% the amendments discussed in this video is going to come in your examinations, let it be May 24 or November 24. So watch this video very carefully. Okay, and before beginning the video, as usual, please subscribe dear, and also share this video with your friends and tell them that the amendment lectures are out. If they have studied from the old syllabus, then they have to compulsorily update themselves with all these amendment lectures. Just one amendment lecture is remaining, which will come after this. With that, all the amendments will get complete. Okay, so firstly let us discuss the concept of the tax regime. See Kanna, earlier till November 23 examinations, or we can say till assessment year 23-24, what was the scenario? There were two tax regimes, correct? Old regime and 115 BAC, which is also called the new regime. Old regime is called the normal provisions, 115 BAC is called the new regime. And earlier old regime used to be followed. There was an option available to the assessee to switch to the new tax regime. If the assessee was not having any PGBP income, the assessee can switch any number of times. Every year the assessee can switch. But if the assessee is having PGBP income, the assessee could switch only one time and that would become permanent. This we had studied till last year. Now the section has completely revamped. So now what is the position? Now section 115 BAC has become the default tax regime. Default tax regime, and the old regime has become the optional tax regime. Sir, what is this old regime? What is this 115 BAC? Both are two different type of tax rates, Kanna. In old tax regime, the tax rates are high, but there are many benefits of deductions and exemptions. However, in 115 BAC, the tax rates are low. However, there are certain benefits of deductions and exemptions have been removed in section 115 BAC. Now this section 115 BAC has become the default tax regime. So if you are not doing anything, by default you will be coming under the default tax regime, that is 115 BAC or the new tax regime. Okay. However, there will be an option to switch to the old tax regime, that is the normal provisions also. About this, let us discuss in the end. Okay, so what is the scheme? Let us discuss in the end. First, let us discuss what are the changes or amendments in the old tax regime as well as default tax regime. In the old tax regime, so now in your examination, the previous year applicable to you is previous year 23-24. That is from the 1st of April 2023 till 31st of March 2024, which is also called assessment year 24-25. So in the old tax regime, are there any changes? No Kanna, not much of changes. What and all update you have to do? Firstly, if a person is born on or before 1/4/1964, then the person will be considered senior citizen. If a person is born on or before 1/4/1944, the person will be considered a super senior citizen. That is one change. Then when it comes to domestic company, in domestic company earlier you used to learn that you have to see the turnover of previous year 2021. So now it has changed. Now you have to see the turnover of previous year 21-22. If it is up to 400 crores, then the tax rate is 25%. More than 400 crores or other cases, the tax rate will be 30%. So that is the change. So there are other things are as such. So there is no other change in the old tax regime. The tax rates, rebate, surcharge, everything is the same as you had studied before. Even the special surcharge rates for dividend income, 111A, 112 and 112A also same as we had studied before. Okay. Now let's come to the special tax rates. In special tax rates, now there is a new inclusion, section 115 BBJ, which we had discussed in the amendment lecture, where we discussed income from other sources. Correct? Winnings from online games. The tax rate is how much? 30%. Fine. Now let's come to section 115 BAC Kanna, that is the new tax regime. So first change in the new tax regime is that now the new tax regime is the default tax regime. That is change number 1. Change number 2 is that earlier the new tax regime or 115 BAC was applicable only to individuals and HUF, but now this section is also applicable to association of person other than cooperative society. For cooperative society there is a different section karna. So association of person, body of individual and artificial juridical person, and it does not matter whether they are resident or non-resident. For everyone this section will be applicable. So for whom and all it is applicable? Individual, HUF, AOP, BOI and AJP, but not applicable to cooperative society. Fine. So this is one change. Next, the tax rates also have changed karna. Tax rates have changed. So earlier you had studied the different tax slabs which start from 2,50,000, but now in the default tax regime, what is the maximum amount not chargeable to tax? It is 3 lakhs, or you can say the basic exemption limit is 3 lakhs. So up to 3 lakhs no tax, above 3 lakhs up to 6 lakhs 5%, above 6 lakhs up to 9 lakhs 10%, above 9 lakhs up to 12 lakhs 15%, above 12 lakhs up to 15 lakhs 20%, and above 15 lakhs 30% tax. So the slabs are what? It is increasing in the 3 tables: 3, 6, 9, 12 and 15. And the tax rates are also increasing by 5%. So 5, 10, 15, 20. However, be careful, there is no 25% slab. So here please draw a danger symbol so that you will be clear and thorough that there is no tax rate of 25% for the default tax regime. So up to 3 lakhs 0, up to 6 lakhs 5%, up to 9 lakhs 10%, up to 12 lakhs 15%, and up to 15 lakhs 20%. Lastly, above 15 lakhs it will be 30% tax. Here also it is slab rate system only, and there is no special slab for senior and super senior citizen in 115 BAC. This we had learnt before also. So for senior citizen, super senior citizen also the slab rate will be same. Now let's come to surcharge. In surcharge also there is one change. What is the change? The change is that the 37% surcharge is not applicable to 115 BAC. So the highest surcharge is how much? Only 25%. So up to 2 crores, about 2 crores if the income goes, then the surcharge is 25%. Above 5 crores also 25% only. You get my point? So the surcharge will be 25% maximum. More than that, no surcharge. So that is one big change. Now let's come to the deductions and exemptions that are not allowed under 115 BAC. Here some relief has been given under the Income Tax Act. Sir, what is the relief? Relief number 1. Relief number 1 is that standard deduction has been removed from the exclusion. So exclusion from exclusion is what? Inclusion. It means what? Now the standard deduction is allowed under the new tax regime. It means what? So that 50,000 standard deduction in salary you can claim as a deduction in old tax also, you can claim as deduction in new tax also. Fine. That is one change. Similarly, even the deduction respect of family pension is now allowed in the new tax regime, that is 115 BAC. So in old tax regime also you can claim family pension deduction. In new tax regime also you can claim family pension deduction. That is one change. And when it comes to the deductions chapter, now you can also claim section 80 CCH subsection 2, that is central government contribution or employer contribution in Agniveer Corpus Fund. That deduction also you can claim under the new tax regime. However, employee contribution we will not be able to claim, which we had discussed in the deduction chapter itself. So that was one change. Now let's come to rebate. In rebate also there is a change karna. In the old tax regime up to 5 lakh rupees only there is rebate. More than 5 lakh rupees no rebate. But in the new tax regime the rebate limit has been increased to 7 lakh rupees. And the rebate amount also, in the old tax regime the rebate amount is 12,500, but in the new tax regime there is double rebate, that is 25,000 rupees. So up to 7 lakh If there is a resident individual who is having total income up to 7 lakh rupees, then the total income up to total tax up to 25,000 rupees will be allowed as rebate. Okay, so total tax amount or 25,000, whichever is lower, will be allowed as rebate. Same concept. And moreover, in new tax regime, there is the concept of marginal relief for rebate also, Kanna. Marginal relief for rebate. There is no such concept in the old tax regime, but there is this marginal relief concept in new tax regime. What is marginal relief? We had already studied in surcharge, correct? Where when the surcharge limit changes and there is only a marginal change in the income is just above the surcharge limit, then what happens? The total tax is restricted to the additional income. That is the marginal relief concept. The same concept is applicable even to the new tax regime. Listen here. Firstly, how to find out the surcharge? We will also see an example, so you will be absolutely clear. Firstly, you have to find out A. What is A? Total income minus 7 lakh rupees. Then you have to find out B. B is what? Income tax on the total income. So if B is greater than A, then there will be rebate. If B is greater than A, there will be rebate. The rebate amount will be B minus A. This is only concept of marginal relief. So let us calculate. Let us take an example. Let us take an example of 7,15,000. If the income is 7,15,000 in the new tax regime, how to find out the tax? Just a second. If the income is 7,15,000, then how to find out the tax? Up to 3 lakh rupees, basic exemption, so the tax will be 0. Up to 6 lakh rupees, the tax will be 5%. So 3 lakh multiplied by 5% is how much? 15,000. Above 6 lakh rupees, it will be 1,15,000 into 10%, that is 11,500. So total tax is coming to how much? 26,500. Now let us see whether the rebate is applicable or not. So see here. In this case, what is A? Total income minus 7 lakhs, which is coming to 15,000. 7 lakh 15,000 minus 7 lakhs is 15,000. Next B. What is the tax on total income? It is 26,500. Then you should see whether B is greater than A. In our case, answer is yes. 26,500 is greater than 15,000. Hence, rebate is applicable. Now, how to find out the rebate? The rebate is B minus A. So, 26,500 minus 15,000, which is how much? 11,500. So, from the total tax 26,500, you can reduce the rebate, that is 11,500. So, the tax will come as 15,000. On this, you can add the health and education cess. You get my point? So this is how you have to calculate the rebate, and this rebate is also there, no Kanna. This will only apply till the income is 7,27,770. If you want, you can note this down and keep. Above 7,27,770, this concept also will not be applicable. There will be no rebate. As usual, the tax rate will apply. So what did I tell you? There is a rebate. For whom the rebate is allowed? For resident individual who is having total income up to 7 lakhs. What is the rebate amount? 25,000 or the tax, whichever is lower. Sir, if the income is above 7 lakhs, is there any rebate? Answer is yes. If the income is above 7 lakh also, there is a rebate. How to calculate that rebate? To calculate that rebate, you have to find out A and B. What is A? Total income minus 7 lakhs. What is B? Income tax on total income. If B is greater than A, there is a rebate. Okay. What is the rebate? Rebate will be B minus A. I hope you are clear. And the example also, if you see once again, you will have total clarity on this rebate calculation. Okay. Now let's come to the next provision. 115 BAC. Now let us see the procedural aspect. Okay. So 115 BAC has now become the default tax regime. So by default, you will be under, or the assessee will be under default tax regime. That is 115 BAC. The assessee who does not have PGBP income, that is profit and gains from business or profession, will have the option to shift out of 115 BAC or not to shift out every year based on their liability. This option has to be exercised along with return of income. So what is the provision telling? The provision is telling that the person who is not having PGBP income, every year they can decide whether they want to stay in the default tax regime or they want to come out of the default tax regime. Come out means what? Coming out means they want to opt for old tax provisions. Okay. Sir, what if the person is having PGBP income? If the assessee is having PGBP income, then the person can exercise the option to shift out only once in the lifetime. Okay, only once. If they are shifting out of the default tax regime, then they will never be coming in the new tax regime once again. However, if once they come back in the new tax regime, they will never be able to shift out of the default tax regime. See, listen here. Let's say there is a person, Mr. A. Mr. A is having PGBP income. Okay. Let's say the PGBP income is there. The person has chosen for assessment year 24-25. The person has chosen section 115 BAC. That is default. It means what? The person has not shifted out of the new tax regime. So no problem. Now let's come to the next assessment year, that is assessment year 25-26. In this case, let us assume that Mr. A has decided to shift out of the default tax regime and go back to the old tax regime. Now, if this person exercises to shift out in the assessment year 25-26, then in all the future assessment years, he will never be able to come back to the default tax regime. Okay. But if he is not following old tax regime and if he is coming back to default tax regime, after that he will never get any option once again. Let us assume that in assessment year 30-31, now this person has broken the conditions for old tax and he has come to default tax. Now, after coming back to default tax, forever he will lose the rights to come back to the old tax regime. That option will be gone forever till the person is having PGBP income. Now let's say in assessment year 35-36, now this person is not having PGBP income at all. In such case, this person can now exercise the option once again. So in short, if I want to summarize, I would say that if a person is having PGBP income, then that person can shift out of the new tax regime only once. If he has exercised the option of shifting out, he can never come back to the new tax regime. But if suppose he comes to the new tax regime, he will never ever get the option to go back to the old tax regime till he is having PGBP income. So now you read this once again. If the assessee has income under PGBP, option to shift out of 115 BAC if exercised once cannot be withdrawn. Once exercised, it shall be applicable for all subsequent assessment years. However, if the option is withdrawn, then the assessee shall never be able to exercise the option to shift out again, except where the assessee ceased to have income under head PGBP. So be very, very clear. Now let's come to employees. This I had already discussed in the previous video. Once again I am telling. So in case of employee, the employee should intimate the employer every year whether they want to shift out or they want to stay in the default tax regime. However, if the employee is not informing the employer will deduct TDS as per new tax regime, that is 115 BAC. Okay. However, sir, what if the employer deducted the tax under 115 BAC and now the employee wants to shift out of the new tax regime and go back to the old tax regime. Can the employee do so? Answer is yes. While filing the return of income, even if the employer has deducted the TDS under 115 BAC, still the assessee will have the option to shift out of the default tax regime. Okay, while filing the return of income, he can shift out. But here also you have to make sure if the employee is also having PGBP income, then he can shift out only once, as I discussed before. So this is the provisions of section 115 BAC and all the changes. Now if you read this section thoroughly, you will be able to make out the changes. You will have absolute clarity. And one more recommendation from my side is that now for practicing for May 2024 examinations, please solve the questions from the new study material. The provisions you can learn from these amendment lectures and my notes, but when you are solving the questions, please solve the questions from the new study material. Okay, so in that new study material, because the tax rates now will be calculated in a different way, so while comparing the answers, you will be easily be able to compare and find out if you are calculating in the right way or not. Okay, now last point for this video is the new section, that is section 115 BAE. So for individuals, HUF, AOP, BOI and AJP, that is there is 115 BAC. Similarly, a new section has been introduced for cooperative society, and that is section 115 BAE. It is applicable only to resident cooperative society. If the cooperative society opts for this section, then they can opt for a concessional rate of tax of 15% plus surcharge of 10% plus health and education cess of 4%. In this case, the surcharge will be applicable from rupee 1 onwards. Okay, so effectively the tax rate will be how much? 17.16%. To avail this rate, they should be registered on or after 1/4/2023, and they should compulsorily commence manufacturing of any article or thing before 31/3/2024. So during, they should get registered on or after 1/4/2023, and between 1/4/23 to 31/3/24 they should start what? Manufacturing. Only if they satisfy this condition, they can opt for this concessional tax rate of 15% plus 10% surcharge plus 4% health and education cess. There are other conditions also there in the section, but for your intermediate examination, if you learn this much, that is enough. Okay, mostly this will only be tested in your multiple choice questions, if at all there is a question. So these are the amendments in the tax rates chapter. I would strictly recommend you to solve the questions from the new study material, and you will have the clarity how to solve the questions and how to compare. Fine. So see you in the next video, where we will discuss the statutory updates brought by ICAI for May 24 exams. So see you in the next video, dear. Till then, take care. Bye bye.